today's video, I'm gonna show you a simple day trading strategy to make $150 trading Bitcoin and cryptocurrencies. And the best part about this strategy, I use this personally to have a 100% win rate and generate profits daily. So with no further ado, let's get into the video. First of all, if you enjoy this type of videos, please leave a like and subscribe, and let's get into the video. So before we start, I just want to show you here this account here that I started on FairDesk, and I've been trading here for almost now 47 days, and the last 3 weeks win rate was 85%, and the last week 100%, and profits here on the side. So basically this is where people can come and copy my trades, and I don't use so much size. And now you can see I mainly make profits daily. This is just for one day. Day trading uses the strategy that I'm going to show you here in this video, making small trades, many of them per day, and that's what I am using to make profits daily. By the way, you can copy as well my trades here. You can follow my trades. I will leave you the link in the description. Now let's get into the video. Now this is the Bitcoin chart, raw, nothing in it. I want to emphasize this strategy is best suited for Bitcoin, especially if you're a beginner. And even me, after few years of day trading, I still only trade Bitcoin mainly because it's so easy to predict, and I'm gonna show you now why. And you want to only stick to Bitcoin. No matter how good you feel you are, always stick to Bitcoin. There is enough volatility in Bitcoin to make money daily and be profitable. Now in this strategy, basically what we need is to find key levels where the price moves up or down or get rejected. And in this strategy, I'm not using no indicators, nothing like that, as usually indicators are faulty and they give false signals most of the time. And I'm all about that 100% win rate and not losing a penny in this market. Now the first thing we want to do is start on the weekly chart. We're gonna go a few weeks back here just to give you an example what the price has been doing within those weekly candles, and how many trades were taken here, and how much money was made within those candles. Now if you're just starting out, what you want to do is always start with the weekly candle, a candle where the price was just going sideways. We're gonna go here on trading view, go to the second row here, and want to look for this horizontal ray. Now you want to activate the magnet here, and what we want to do now this week here, we can see now we had this large pump here, and then we had the price going sideways. This is perfect for day trading. Now whenever you have price going sideways, this is the perfect moment to start day trading. Now this is the first week where we had a ranging price. Now I like to put it in orange, so I just know when I am zoomed in inside these candles that I know this is a weekly candle. So what I did here exactly is I go to the low of the candle, as you can see here. Now low of the candle, I put the line here, and then the high of the candle, and I put this line here. Now I like to put the low and the high on dashed lines like that, so I know this is a low of this candle. And this candle here gonna help us through the whole weeks and days coming after it, and you're gonna see all of this now. Now we're gonna keep it dashed, and the most important to us is as well the weekly open. So what is the weekly open? So each candle, as you can see here now, each candle opens somehow. It's the body of the candle. The body of the candle is the open, and it's this one, and we want to keep the line straight, a normal line. And we can see now if I zoom in, we have it right in the open. So this candle, the previous candle closed, and this one opened, and usually they open right at it. And the one on top here is the close, because now we have the new one opening, the red one here opened right after it. So now for us, we just care about this one for now. Now we can see now we already have some sort of a range forming here. Let me remove the volume for now because we're gonna need the volume after. As we can see here now, we already have some sort of a structure going on into our charts. We have some resistance, some supports, some mid-range. Now the next step is now to go to the daily. So as soon as we are on the daily here, what we want to look for, the most important day is Monday. Monday, if you are a beginner, is best not to trade and just wait for the Monday's range to form. Usually the Monday is the first candle that starts the week, right? So what we have here is we're gonna do the same thing for Monday. So this is the Monday candle, and we're gonna put again this horizontal ray. So we're gonna put it in light blue here, so we know it's the Monday's low, and we're gonna put as well dashed line. So I know throughout this whole days, we know that whenever we're at this line, it reminds me that this is the Monday's low, and you're gonna see why. Now we're gonna take out also this Monday's high here. Now you can see this is Monday's high, and put it as well on the light blue color, and we're gonna go with Monday close. So Monday close here is important. Now we can see the Monday open is the same as the weekly open, but we want as well the Monday close. It's very important. Now we're gonna keep it that color. We're gonna put a normal line for the close as well. Now those are all important support and resistance. Now this is not your usual support and resistance. This is how pro traders work, and this is where big corporations and big players usually place their orders. There are a lot of stop losses, so usually these are levels of a lot of liquidity. And next I'm gonna show you now how to know that this liquidity got grabbed grabbed and we can enter a trade. Now the next step, now if we go now to the 15-minute charts, you got those lines set up. Now you are ready to start trading. Now if we go here, the start of these lines, as you can see here now, is very clear. It's giving us a range. Now we can see the start is the Monday, and this one here and this one here would not count, as these were the weekly high and the weekly low. So we're gonna assume that we did not know this range before. So everything that happens after here, that means that we already know the weekly low and the weekly high, and that's gonna be a different story. But from here, we are only trading Monday's high and Monday's low. I hope this all makes sense. If you have more questions, I have a Discord for free. You will find the link in the description. You can ask me more questions there, or as well leave them in the comment section. Now let's keep going here. So we can see now this high here and this low here do not count, as these were Monday high and Monday low. And after that, everything from here happens. We're gonna be trading on a Tuesday. Now if you are starting out, never trade on a Monday. Just wait for Monday to form and you have the whole week to trade until Sunday. The market is open. Now what we have here, we have Tuesday starting. The first thing we notice is that we have the price bouncing off the Monday's close, and then we had a rally up. Now here, this would be usually a first trade to take, and this went right at the Monday's high. Now we could take profits at the Monday's high, and when you are day trading, it's pretty hard to know at what level the price will go, but we know here on the charts we already have the Monday's high, and we're gonna take profits here. Now this is the first trade of the week, and we had that. As soon as the price hit this level here and started dropping here, we can see now we lost this Monday high, and this usually would mean for me that I'm gonna take a short again in the market. And look at that. Now we took a short here again from Monday's high to Monday's low. That's another winning trade here for us. This strategy is perfect. The volume here will be very important. Now we can see we went to the Monday's low. Let's assume you did not take this short and now you're still on the sideline, and you come in and you see that the price came right at the Monday's low here. Now how do we know we can take a long here? This is very important. Now this is where the volume comes in. Now if we can see now here, the volume spiked up here right at this low, right at this. We can see now this low got taken here, the Monday's low, and we can see a spike of volume. Usually this means that a lot of liquidity got taken, and usually the price reverses back. This is very important, and this as well called swing failure pattern. So how do we recognize this? Is like candles like this you can see now here. So whenever we have this wicks candle with a big wick, large wick, and a small body and a huge spike in volume, this usually means the price will reverse. Now look at this beauty again. Now as soon as we reverse from here, now usually I would take this long here, and very important, never trade without a stop loss. Now the thing that makes this strategy very beginners friendly is we always have our stops. We know where to take the stops, and it's very important to never set an order. You never set an order at Monday's low assuming that it's gonna hold. We never do that. This is not what we do here. We're aiming to not lose a penny in this market, and we are waiting and patient, and we're waiting for these perfect reactions. As we can see, Monday's low, huge spike in volume, and the price reverse, and then we take a long here. Now we take a long, and look at that again, right back at Monday's high. We take profits at Monday's high. Now we're taking profits, we do set orders, because sometimes you're not in front of the screen, you're doing something else, and we are not greedy. This is a 2% move. It means if you had a position of 10k, which means that you can take a leverage of 10x of your $1,000 or whatever, of a 10k, that means a $200 right there. Again, here we can see the same things happening. A candle like this, we did not see a spike of volume, but nonetheless the price retraced back, and we can see now the price retracing back towards where? Towards Monday's close. Again, that's another trade we can see here. Pretty easy risk, stop loss right above this previous week, and then we get another 1.4%, which would be another $140 for us trading here. And we can see now we get a little spike in volume again here, a little spike with an SFP with a swing failure pattern. As we can see now here, this means we have a wick. The price got bought up, a lot of liquidity, price ranged a little bit here above Monday's close and around the weekly open, and then we saw this price spike. Now here we had another trade, and we're gonna take again profits right at the Monday's high, because we could not predict that the price will go high. But here things change, because now we have the weekly high. Now we have this weekly high, and we're gonna here come in and put a weekly candle high, and probably would not take this trade as well. Why? Because now we still don't know if this is really the weekly high or not. So we're still being patient. We're not trying to predict anything. We're just trading what the charts tells us. But so now what happened is we get this huge crash right at Monday low, and then we got a new weekly low here. And look at the spike of the volume here, this huge spike in volume with this huge wick. Now right back where? Right back at Monday's low. Now here usually I would take a long again here from, because now we have a huge spike of volume, price got back right into the range above Monday's low, and we could take another trade of around 2.5%, which would be around $250 again here. Now we took this trade and we could wait now, because now we can see the price is just ranging. This was a Friday and a Saturday, so usually during a weekend the price just ranges. Now nonetheless we could still trade this. Now what we know about the weekends is like large corporations that trade this or buy large amounts of Bitcoin or whatever, they are out, they are not trading, so usually not much happens, but it's still a perfect trading paradise because we still have the ranges going on here for us. Now the ranges are going on here for us, we could still day trade this easy, simple if you're chilling on the weekend. Now we have first trade here right from the Monday's close to the Monday's high. We got another trade from Monday's high to Monday's close, and here we have another wick. This is important. Now we had a wick and this was right on a Sunday. Now once we had this wick, we had this large volume coming in here. You can see now this large volume, this wick. This usually means the price will reverse because we have a large wick, a lot of buying happened here on a Sunday. Probably the Asia session is preparing to start the week, because usually the week starts on Asia and then goes to London session, and then we have New York session. Now you don't need to care about all that, just trade the chart. Now if I was on the front of the charts on a Sunday and I will see this, I will take a long and place my stops right here, and then again we have another long here right at Monday's high again, another trade, another $150. Now we can see now the price rallied hard, and where it went now, it went to the weekly's high. Now this previous weekly high we had here, got retested again, and look at the beauty, because now we have a larger range, which is the weekly range now with that we can trade as well. We had a run up here, the first test and then the second retest, and the price couldn't pass through, so this would be a very good short position here, and we can see not so much risk, around $50 on your $150. So stop loss right above this high, and we can take this trade right at Monday's close, and this was a 3.2% trade. And if you are trading with a 10k position on leverage, which means you can borrow money on leverage and you can have a 10k position, you would risk $50 to make $320. You will have taken this trade on a Tuesday. On Wednesday you would have closed this position, and now you are having $320. Now what we have here again is the price bouncing right off the Monday's close. We can see now we have again volume spiking, which is very good indicator that now we have a lot of buying happening here. You can see the spike in volume right here, and we can see the price slowly curving back up. Maybe if you're conservative, you're gonna wait for it to reclaim this weekly open price range, and then we had again this one here coming back here. So this is showing strength overall as the price is moving like that. So we're gonna take another long here, another long right where now from the Monday's close right to again weekly high, so again to the weekly high, another 3.4% or 3.5% trade here. And what happened again here is you can see there are plenty of trades. Even if you miss one, there is the next one, and that's the beauty of Bitcoin. When it's ranging, it's perfect for trading. And this, by the way, you do not use this with any altcoins, because altcoins are very volatile and they are hard to predict. But Bitcoin is pretty simple. It's the old man here, pretty simple to predict, moving too slow, so we can make money off. Now we can see again we had a rejection. Look at the spike in the volume here again. You can see huge spikes. Now here we're going right here, price couldn't go above, and we can see now we got a rejection. We can see this little wicks, the candles failing to go above, and the spike in the volume, we can see the volume too high. And now we went back again to reclaim, to test the weekly high, and this would be usually the entry price, and this would be a good entry for a short. And we can see now we get another short right to Monday's close, or we can even take it right to Monday's low, and we keep going. And I hope this all makes sense, guys. Remember, if you have any questions, you can ask me on the comment section, or you can go into my Discord. It's for free. And remember, you can always follow my trades here, copy trading. You can follow my trades and make passive income while I am day trading daily. Automatically follow my trades. I will leave you the link in the description to FairDesk. You don't need any VPN, no KYC to register to this exchange. Now we are here in this range, and what happened here, we can see as well I have the same levels, weekly high, weekly low, and I've been trading this. So yesterday I took this long here, I took a long and I took a short, and if we go here, we can see now here I shorted Bitcoin here yesterday the 7th of August, and then I took a long again yesterday the 7th of August, an hour between each of these trades. And basically if we go now to the 15 minutes, we can see these trades that I've taken yesterday live playing out, as yesterday was a Monday, so I was waiting. Blue line here is the Monday open, and as soon as I saw price failing, I shorted this low, and when I saw this huge huge spike in volume. You can see now this huge spike in volume. I took a long and right towards this weekly open, as you saw in the examples before, and this is the trade that you see here. You can see here the PNL is not high because I have people following me with small amount of money, so I don't want to take big positions because they cannot follow me on those positions. So I take small positions so that everyone that follows me with even $100 can follow my trade. Check out FairDesk. I'll leave you the link in the description if you want to follow my trades. Thank you so much for watching this video. I'll see you on the next one. Cheers.